What's up everybody, Tom here with another video. In this video, we'll be taking a look at the latest stock market news for the week ahead, as well as our technical analysis using our top-down approach on the S&P 500, Nasdaq, Volatility Index, Dollar Index, Gold, Bitcoin, and more. There's been some pretty damn big moves over the last couple of weeks, guys, and I'm telling you, there is some interesting stuff to go through in these charts right now. Stay tuned. So as we always like to do on this channel, let's take a look together at some of the things that happened last week. More notably, the gridlock, of course, in the US political system. We saw no blue wave, and in fact, what we did have is an incredibly tight election result. And now it seems that we know who's won, which is, of course, Biden. In this case, we saw a huge amount of movement in the FANG stocks. Microsoft, Apple, Google, Facebook, Amazon, all very, very well received this news. Main reason is, of course, taxation. Now that the Senate seems to be, at this stage anyway, and we'll talk about that a little bit later, controlled still by the Republicans, it's less likely they're going to get through several different tax kind of hikes and other things that were going to potentially hurt these shares. So we did see a massive increase throughout those sectors. Let's take a look at Friday's result in the market. We started a little bit weaker during our, of course, live session when we were doing our analysis on the charts. We had the non-farm payrolls. It came through pretty strong. Looks like unemployment is technically dropping, but those numbers are very hard to interpret, as we've seen before. As is normal and customary, the first hour kind of was usually a little bit different to what ends up happening throughout the day. And then we saw a relative amount of buying and some selling into the end, probably taking a little bit of profit there from the bigger traders. Remember, what happens at the end of the market is the more important factor, because that's where the Wall Street's really making the bigger decisions and bigger money purchases. When we're taking a look at the week result from sectors, we can see a few things. When we heard about the gridlock potentially that was going to happen, of course, in the presidential race and no blue wave, we saw XLV, the healthcare sector, get a really big spike in the markets. This was one that was going to come under a lot of pressure if Biden was going to be able to bring his sweeping healthcare change and reforms through. Some other notables that have done decently well, of course, materials and industrials and technology also had that spike based on a couple of things about the Senate. When we take a look at the last couple of months and we think about what's happened year to date in all of the sectors, I'm doing this a little bit right now because it's important for us to make decisions on what we might want to be in long term. You may want to just buy the S&P 500. You may want to just buy the Nasdaq. But you can also look at different sectors and target those areas. So we all know technology's been the best. But consumer discretionary has also done incredibly well. XLY up almost a dangerous amount, in my opinion, 22.94. We're waiting on stimulus still. Will we see that very, very quickly? Then we've got some other interesting ones. Industrials, XLI, a sector that we've been looking at quite a lot, just poking its head in positive territory now for the year to date, 1.46%. We've also got some other areas in here, of course, materials and a few other things. So there's still value or opportunity in several of these key sectors after what looks like to be a Biden win. And it'll be very interesting to see how XLI and others perform over the next couple of weeks. We'll be taking a look at that together during our live analysis as well on Monday before the bell. So come and join us for sure. Let's have a little quick look at how the election turned out. Many of you will be aware of this by now. It looks like Nevada went to, of course, Biden, and Pennsylvania, while still counting, looks like it's going to be for Biden as well. And that's really the one that clinched this election. If we're talking about what's happened on the weekend since that result, very, very small move, 0.36% up since the result came out. Not enough to really be thinking about. And that's because we had a very large move off the election gridlock. And we'll talk about why that move was maybe a little bit big and why we might see a slight decline this week in the markets after such an initial big, large move. What does Biden mean for the economy? Well, we're going to have a bit of a move towards climate change and energy, potentially. We're going to have tech regulation, which I think is less likely now due to the gridlock. Trade is, of course, going to be different to how it was under Trump. And we were talking about taxes and healthcare, but many of these things may not be able to come through. So I think that depending on how the race happens, and of course that could flip to a blue wave if we see those Senate results come through as Democrats, I think in February next year. At this stage, we're really just looking at more of the same. And remember, markets do better under gridlock kind of situations. So if we don't have the Republicans losing the Senate, we expect more of the same long term for the markets, an increase, and that really to be the main story of the next 4 years. Put call ratios, we had a very high put call ratio on Friday here, 2.02. We know that whenever the put call ratio is quite high, it's less likely that the market will sell that day because it traps a lot of us, the retail traders. So 2.02 reading is quite high. A lot of puts opened, meaning a lot of people were betting against the market going up. Q3 earnings beat data, 82% still, very strong beats data, signaling very strong market conditions. Put call ratio in terms of the way that we look at it on the market, still coming down a little bit, but overall still fairly strong from the position of a decent amount of puts being opened, meaning less likely to sell at this stage, but possibly this week coming, things may change. Fear Greed Index here, if we go through all of the things that make us kind of get a bit of an understanding on what's happening in the markets right now, I don't think there's too much here that's that interesting. Obviously, you have stock breadth, things like that. Fear and Greed oscillated down the bottom here, almost fell down to our perfect 20 zone last week. Didn't quite get there, and now it's rebounded a little bit. But we still expect some declines after a move with that many gaps in the market. So let's talk about the VIX or Volatility Index first. And then let's talk about the dollar index and into, of course, the indices around the world. So what happened on the VIX? Well, the volatility index fell really, really low. We talked last week about how a 41 spike would be at the same point as we'd make a new low, most likely, on the S&P 500. It did not happen. It rejected this zone several times. And then as it became clear that we'd have a gridlock pretty much regardless of what happened with the counting, whether Trump or Biden won, the VIX or volatility index fell all the way down, back down to the previous levels. Now, where is it right now? Notably 25. Why is that notable? Well, if we get our little support line up here, we'll notice that this level here, generally volatility has spiked off. So this is a signal here that potentially we've reached a very critical zone. We didn't get through there last time, where we may see some volatility come back into the market. Definitely be watching this 25 this week for the market. Very, very important zone for the VIX. If we think about the dollar index as well, dollar index declined under these results in terms of the US election, non-farms, etc. We are now back almost at a 92. So we're sitting at 92.22 right now. And what does this mean? Well, if the dollar index gets here, is it going to find some buying pressure? Arguably it may. Now, if it finds buying pressure, what has generally happened when dollar index has gone up? The stock market has come down. So we're about to reach a very critical point. And when we go through the larger timeframes like we did in the live stream, you'll see why. Here we are in the weekly. Notice here, 88 kind of area was formed after the previous close low. This is a very important zone, this 92. If we go to a monthly, it'll become even more clear why it is. Take a look at this. Resistance, support, resistance, resistance. We know the 92 is super important, and we also know that when it got through this zone, it flowed onto 88. So if 92 breaks and closes below, expect the stock market to continue moving up. If 92 holds, what do we expect? And it kind of moves up. Expect the stock market to have a dip in it. And we'll talk about both scenarios in just a minute. Let's now talk about gold. Gold, very nice breakout here above that 1930 zone. It's now moved relatively high a little bit too quickly. So we expect a decline here, kind of in line with that dollar index. Maybe the dollar index comes down slightly more, starts to buy up, puts a little bit of pressure on gold, and we see gold move down to the 1930 area, and then at the same time touch the 20 exponential moving average, acting as some form of support, a lightning bolt move up, and then possibly back to 1960 or even 1980. Gold still looks relatively bullish and quite strong at these zones. When we take a look at silver, silver above the 25, nudging up towards that 26, it got 25.855 and found some resistance. If you put a horizontal line on this 26, you'll see why it's such a key zone for silver either way. I would be looking at this week. Multiple support buys off this area. then if the market is to get above it, so say it closes above and then comes back down and touches, this should act as support and allow purchases of silver to get in upwards of the 28. There's a lot of resistance as well at the 28. So I think if silver moves through the 26 this week, we're going to basically get to a 28. If the sellers come back in, they're going to pressure it down, and we may see some more buying pressure on these previous highs through this kind of 25 zone. So we may see some buying pressure there as the market kind of just declines a little bit due to dollar pickup across the board. Silver's worthwhile to watch, and just to put it in a big context here, silver is still very low when it comes to economic recoveries. Here's the GFC. Here's the recovery phase. Silver usually has a couple of really good years of growth in it due to infrastructure builds and its use throughout, of course, everything when it comes to economies. Now, if we think about where it is right now, it's still very far away from its previous kind of euphoric highs of almost $50. So there's certainly more room to go here for silver, possibly 35. Look at these 35 resistances. Well worth considering silver, looking for opportunities, and then making decisions if you're looking at long holding this for quite a few years. S&P 500 now, what is happening? Well, we like to do a bit of top-down analysis generally on the S&P 500. So if we go to the monthly, we can automatically see how important this previous zone was. This 3230 area, we always knew was going to act as support because it was previously, but if we did get decline underneath this zone, it was going to trigger some pretty large selling. Now that didn't happen. Wall Street purchased this zone, and we kind of talked about how this was the first area. A lot of stocks were finding heavy support, etc. Now the weekly closed as a big engulfing candle, but notably it closed right around this 3500. So we're talking about 3509. We're basically right on the previous body closes. Not really a very strong close above any of these zones. So what does this mean? Well, we've hit weekly resistance. We've hit a point where the market is clearly now thinking, well, we've never been as high as this and closed a week. If we get another week, even a higher close, then that signals really big bullish momentum. And it's something that we're watching this week. But you'll notice this trend line's coming through as well now. So we've got this trend line through the top, and it held Friday here. We've got peak, peak, and of course a lower peak. There's obviously divergences and things that people are looking at on certain indicators. But this could be where we see a bit of a pullback. And this pullback is going to be the important point. Now, if the market just blasts through, gets through easily, and then we would expect probably a pullback back to this zone, and then of course a move on upwards and onwards. But when we're talking about what could happen with a pullback, let's just quickly talk about a fib here. So if we take a Fibonacci pullback of the current move with all these gaps that came through due to the election result, you'll notice that the 20 and the 50 have crossed on the 4-hour chart here on the SPX, the real market. And that if the market's going to come back down, it's going to come between a 38.2 and a 50 fib, right around that 3400 zone. That's also where the previous resistances were, between 3400 and 3430. So it makes sense that if the market's going to have a small decline this week, it would most likely find buying pressure in this area, and would certainly be a very interesting area for us to look at in the market. Another thing I wanted to note, that if we go back to the weekly and we get rid of this line here and we just consider the body closes again, what is this pattern lining up to be? Well, it's basically lining up to be one giant range-bound market between the weekly candles, specifically the body closes up here. If you then consider what happens next, we could be looking at a very large move if we get a weekly break above this zone. In fact, we'd be looking at this distance move again, and that would trigger us almost to a 3,800 S&P 500. Yes, a 3,800 S&P 500. We believe for a while that there's optimism here and there could be a very nice move over the next 12 months due to monetary policy and strong earnings and everything else in the markets. But it may not be just yet. This could be what we've got set for December during a Christmas rush period and possibly a stimulus idea. So very, very well worth looking at this on the charts and considering these levels. We can also note the 20 exponential moving average has been found of 2 supports and of course a support down here. So, very, very good level for reloads throughout this bullish process if we continue in the bullish kind of momentum longer term. Let's have a look at the Nasdaq now. More of the same for the Nasdaq. 20 exponential moving average was reached on the weekly here, and of course bulled off. Very strong candle, similar close to everything else, right around that 12,000. We closed at 12,091 on the Nasdaq. Body closes mean a lot. This is kind of signaling further bullish momentum, but similar to the S&P 500, we may just see a slight decline this week into a Fibonacci pullback. So it'd be worthwhile getting the Fibonacci's out, taking the distance of the move, and then considering what would a pullback come to a 38.2? Is that going to be level of resistance or support? And we've got resistances through this zone, and therefore we should have some form of support and a 20 exponential. So 38.2 fibs, worthwhile considering on the Nasdaq. If we get a bull run, expect a bull run to reach something like a 12.4, pull back, and then retest from the previous resistance over here at about the 12.1, and then of course find further buying pressure this week. Both key levels to think about on the market. It's all about key levels when you're looking at the market as a general whole. Bitcoin is very interesting as well. Remember, Bitcoin trades over weekends. Now we almost got a 16,000 reading just underneath, showing me that there clearly is retail traders all over Bitcoin right now. Usually if it just stops before 16,000, that proves to me that the smarter traders know what they're doing. They know that there's huge amounts of orders selling at 16K. You want to be the smarter person selling just before then. And it has had a pretty notable sell-off here. If we go to a 4-hour, take a look at this sell-off. We go 15,968 all the way down almost to 14,356 in not that much time at all. And this is what's expected after such a large move. It kind of reminds me of gold a little while ago. We went euphoric here. To put it in perspective, if we go to a weekly candle, take a look at how big these last couple of weeks are. Generally in Bitcoin, it does hold for a little while, but remember it's never held a monthly, and I'll repeat this, a monthly above 14K. So this is a very significant move that was due for a pullback. There's never been a monthly body close above 14K. So that will be significant for the bulls to watch here on Bitcoin. But for me and my money, I'm kind of thinking there's a pullback due here on Bitcoin, and it's most likely going to be fairly significant just due to the actions of what happened recently and the euphoria that came back over this market. So we'll be watching this one throughout the week in our analysis. Let's talk about what's going on in the news for the week ahead. Always important to think about the news and what's going on. So we have a bunch of information coming out throughout the week. This is Forex Factory calendar results. And you can see here Fed Chair Powell is speaking on Friday, my time, at about 3:45. So well worth checking out forexfactory.com, putting it on, and of course checking it to your time zone around the world, as I know all of us live in different areas, but we do have one thing in common. We love to trade the American market. So look, good luck to everyone this week. I think it's going to be another interesting week, but it looks like at least that key US election news and all of that stuff may be out of the way. Now we move into the next phase of the markets, trying to reprice all the assets and figure out the risks and the benefits of everything moving forward. So swing trading will hopefully come back in, and everything else. If you enjoyed this content, please remember to, of course, subscribe, hit that like button, and we'll see you live Monday for the opening bell. It's going to be a great one. I can feel it right now. Bye for now, guys. See you soon.